10 years ago, one supermarket was the undisputed heavyweight champion of the bargain. It was loud, aggressive, and had the backing of the biggest retailer on earth. It dominated the TV screens with a jingle and a double tap on the back pocket that every single person in the UK recognized. Fast forward to today, and the party is officially over. Walk into those same automatic doors today, and the vibe has completely flipped. The aisles are strangely quiet, and the prices now just make you wince. ASDA is in trouble. We're witnessing a retail titan faceplant in real time. Over the last decade, this company has surrendered more market share than any other UK competitor. They went from controlling nearly 18% of the entire grocery market to barely holding on to 12%. So, how did the UK's price leader end up drowning in £4 billion of debt, losing a war to the discounters, and literally running out of stock? To understand why ASDA is bleeding out, you first have to look at the battlefield. For 20 years, the UK grocery market was a comfortable club known as the Big Four: Tesco, Sainsbury's, ASDA, and Morrisons. They had an unspoken truce. Sainsbury's was for quality, Tesco was for convenience, Morrisons was for fresh food, and ASDA was for value. That was their turf. Then the disruptors came. For a long time, the Big Four laughed Aldi and Lidl off. They thought British shoppers would never trade their Heinz beans for off-brand German alternatives just to save 20 pence. They were wrong. Over time, the discounters improved their quality and built sleek new shops. They completely flipped the script, turning a trip to Aldi into a savvy financial flex. This hurt everyone, but it absolutely decimated ASDA, because ASDA's entire identity was being the cheapest. When Aldi and Lidl came in and undercut them by 15% to 20%, ASDA's reason for existing evaporated overnight. They were left stranded in the squeezed middle. They weren't premium enough to tempt the Waitrose crowd, but they were no longer the cheapest option for the budget conscious. Then even more challenges emerged in 2021 when Walmart sold ASDA for £6.8 billion to the Issa brothers and private equity giant TDR Capital in a leveraged buyout. That basically means that the majority of the cash for the deal was borrowed. If you aren't a finance expert, think of it like this. Imagine buying a used car entirely on a high-interest loan. To pay it back, you have to run it as a taxi 24/7. But while you're grinding just to make the monthly payments, petrol prices spike, your insurance premiums jump, and suddenly 10 other cheaper taxis show up, stealing your passengers. You end up driving the car into the ground just to keep the bank happy. You can't afford a car wash, you can't fix the dents, and you definitely can't change the oil. Overnight, ASDA went from being a protected subsidiary of cash-rich Walmart to a standalone company saddled with a debt pile that has ballooned to nearly £4 billion. This might have been manageable if the economy had stayed stable, but when interest rates skyrocketed in 2023 and 2024, the cost of servicing that debt exploded. Suddenly, the payments became crippling. This has created a situation where every spare penny ASDA makes flows directly to the banks rather than back into the business. While Tesco was pouring money into automation and Sainsbury's was spending millions upgrading its Nectar app to lock in loyalty, ASDA was frantically scraping the barrel just to pay the bills. This financial pressure is the root cause of the decline you see today. To understand the next disaster, you have to understand what made ASDA special in the first place. For decades, ASDA actually owned the land and buildings for about 75% of its shops. This protected them from rising rents and greedy landlords, keeping their operating costs rock bottom. These savings are what allowed them to keep food prices cheap for so long. But when you're drowning in debt and desperate for cash, that property portfolio stops looking like a safety net and starts looking like a piggy bank. The new owners needed liquidity and they needed it fast. So they initiated a massive sale and leaseback program. Essentially, they sold the physical ground beneath the supermarkets to huge investment funds like Realty Income Corp. This raised hundreds of millions of pounds instantly. But this quick cash came with a deadly catch. ASDA now has to pay rent on the shops it used to own. Bloomberg reports that these deals have saddled the company with massive, long-term rental bills. They traded a one-time cash payout for a forever bill that will eat away at their profit margins for decades. Critically, this kills their flexibility. If a shop stops making money, they can't just close it or redevelop the land. They're now locked into expensive years-long leases. Then there was the technical meltdown. When Walmart sold the company, part of the settlement was that ASDA had to stop using Walmart's computer systems. For 20 years, ASDA ran on Walmart's backend, arguably the most sophisticated logistics software in the world. Now they had to build a new one from scratch. They called it Project Future, and it nearly brought the business to a standstill. The project cost nearly £1 billion, and in a frantic bid to get it finished, they rushed the rollout, migrating the systems at supply depots at breakneck speed. This rush shattered the supply chain. The new system simply couldn't talk to the warehouses correctly. This disconnect spawned a glitch that insiders call ghost trucks. The computer system would hallucinate, telling the logistics team that a truck was full of stock when it was sitting empty. Or it would tell a manager that their shop had plenty of bread when the shelves were actually bare. The chaos even spread to payroll, shortchanging thousands of staff on their wages. But the spreadsheets and software glitches only tell half the story. We need to talk about the dirty ASDA phenomenon. Throughout 2025, reports came in about systemic hygiene failures. Insiders describe warehouses where waste piles up in the corners because there simply aren't enough hands to clear it. Staff have reported vague off smells lingering in the chillers because maintenance schedules have been slashed to the bone. One particularly grim report from an employee described rotting pumpkins leaking onto the warehouse floor simply because no one was available to move them. This links back to the debt. When you're broke, cleaning and maintenance budgets are the first things to get cut. But retail is psychological. When a shop feels dingy, the food feels lower quality. Even if the apple is the exact same apple you'd find in Marks and Spencer, it looks unappetizing sitting under a flickering fluorescent light next to a spill that hasn't been mopped up in 3 hours. The result is a vicious cycle. Fewer staff means messier shops. Messier shops drive away customers, and fewer customers mean less money to fix the mess. The looming question is whether ASDA is destined for the same fate as Woolworths or Debenhams. Despite the collapse in market share, the bones of a giant remain. The company still controls a massive physical footprint, and their George clothing brand remains somewhat profitable. Reports suggest the Issa brothers and TDR Capital may be looking to sell, but the path is blocked by the balance sheet. Finding a buyer willing to take on a company burdened by £4 billion in debt and falling revenue is a massive challenge. For now, the business sits in a precarious deadlock. It remains tethered to its junk-rated debt, forcing it to manage interest payments rather than fighting for customers. The for sale sign might be ready to go up, but until the debt is addressed, the company remains stuck in limbo, watching its competitors disappear into the distance. This standoff represents a unique kind of corporate tragedy. Unlike Blockbuster, where the market simply evaporated overnight, the demand for affordable food remains higher than ever. The conditions were perfect for a value-led supermarket to dominate. Yet, that opportunity was squandered. Instead of capitalizing on the cost of living crisis, the business turned inward. The priority shifted from serving the customer to servicing the debt, leaving the shops to wither while the board focused on financial engineering. But what do you reckon? Is there a way back for this giant, or is the damage done? If you are one of the millions who walked away from ASDA recently, we want to hear your side of the story. What was the specific moment that made you switch? Was it the price hikes, the empty shelves, or did the general atmosphere just feel off? Drop your take in the comments. We'd love to read it. And if you enjoyed this deep dive, give us a like, hit subscribe, and tap the bell so you don't miss the next video. Cheers for watching, and we'll catch you on the next one.